Hi, I'm Emily Haynes. I'm a CPA and the founder of Expat Tax Solutions, a boutique U.S. tax firm specializing in Americans living abroad, specifically in German-speaking countries. In this video, I want to talk about the foreign earned income exclusion. So as I talked about in the last video, when you're a U.S. citizen or a green card holder, you are taxed in the U.S. on your worldwide income, no matter where in the world you're living. And if you're living outside of the U.S., you're probably also paying tax in the country where you're living. So there's a few ways to avoid paying double tax on the same income, and the foreign earned income exclusion is one of them. So in this video, I'm going to talk about what it is, how you qualify, and what types of income you can apply it to. But first, of course, a disclaimer. So while I am a CPA, I am not your CPA. This information I'm providing is general educational and not specific to your situation, and it's not to be relied upon. If you have specific questions about your specific situation, you really need to be hiring a professional who can look closely at your unique individual situation. So what is the foreign earned income exclusion? You may be familiar with this as the roughly $100,000 you can make outside of the US without getting taxed. For 2023, it's actually $120,000. This is the simplest and the most straightforward way to avoid paying taxes on income you earn outside of the US. So essentially on your tax return, you report your income and then you tell the IRS, well, this amount was foreign income, and then you subtract it out and calculate the taxes on the difference. So if you look at that in numbers, let's say you had $80,000 of income that was foreign, and then you exclude $80,000 of it, so your taxable income is now zero, and if your income is zero, then your taxes are zero. So that's quite nice. Obviously, it's a little more complicated than that. It wouldn't be taxes if it were that simple. So let's go into a little more detail. So let's start with what kind of income you can exclude. So this is called the foreign earned income exclusion. So it has to be foreign income, first of all. And income is usually foreign based on where you physically are doing the work. It doesn't matter where your employer is, where the money is getting paid from or to, or how it's being reported by your employer. So whether it's W-2 or Lohnsteuer, so employment in Germany, if you're doing that work outside of the US, it is most likely foreign income, even if it was W-2 and you had taxes withheld on it in the US. And second, it has to be earned income. So that's usually employment or self-employment, where you're physically doing something to earn the income. So this is usually not going to be rental or investment income like interest, dividends, capital gains. There are other things you can do with that income. So the first thing to figure out with foreign earned income exclusion is whether or not you qualify. And there's two tests to determine whether you can take this exclusion. The first is called the bona fide residence test, and the second is called the physical presence test. This is where you're counting the number of days outside of the US. And you have to pass one of these, not both, just one or the other. So the bona fide residence test is for people who legitimately live abroad and have an established residence outside of the US. So this is a real honest home, not that you're renting a bed in Puerto Rico just to avoid US taxes, but you fly back to the US to your family every weekend. This is not you backpacking around the world being a nomad. This is for when you have a bona fide, which is a real legitimate home in another country. And you have to be subject to taxes on your income in that country. So to qualify, you have to have had that residence abroad for a full calendar year, so January 1st to December 31st, to establish it before you could qualify. So if you moved outside of the US at any point during 2023, you won't pass this test for 2023. And the year that you moved, honestly, it's a really great time to hire a tax professional with knowledge in this area of international tax. The year of that move can be tricky, and you really want to set yourself up for success going forward. So even if that seems like an investment, I feel like it's a worthwhile one. So if you haven't established the bona fide residence, then you can still use the physical presence test. So with this, you have to have been outside of the US for 330 days in a 12-month period. So that's different than the bona fide residence test, where it's based on a calendar year. For the physical presence test, it's any rolling 12-month period, so that can cover 2 years. So let's say you moved to Germany in the summer of 2023, we'll say June 1st, and you went back to the US for Christmas for 2 weeks, and that's the only time you went back to the US. So in the 12-month period from June 1st, 2023 to May 31st, 2024, you spent 14 days in the US. That means you spent 351 days outside of the US, so you qualify under the physical presence test. Now, if when you do that math, you're cutting it close to 330, you need to be very careful on how you're counting these days. Because a day outside of the US is a full 24-hour midnight to midnight period. And that is a day outside of the US in another country, not when you're flying. So for example, if you fly on May 30th and you leave the US on an overnight flight to Europe and you land on May 31st, May 31st does not count as a day outside of the US because from midnight to 7, 8, 9, whenever you land in the morning, you are not outside of the US when you're traveling. So you can only start counting from June 1st. So sometimes I hear confusion about this in expat circles about these tests, and people think that they have to pass both of them. So they're maybe eternally counting days and limiting their time in the US just to avoid taxes. But really, as long as you pass the bona fide residence test, so you've spent a calendar year with your tax home in a foreign country, and then that continues on. Once you've established that, there's really no limit to how much time you spend in the US to qualify, as long as your real residency remains outside of the US. So that might happen, for example, if you have a family situation and you're back in the US for many months, but you never give up your home, and your belongings stay in Germany, and your social circle is there, and you intend to remain, you're still qualifying under that bona fide residence test. Now, keep in mind, you can only exclude your foreign income. So in that example, if you're spending months and months back in the US and earning income in the US because you are physically doing the work in the US, even if you have an employer in another country, that's probably going to be US income, not foreign income. So this isn't a scheme to avoid paying all taxes. And keep in mind with that bona fide residence test, one of those requirements is that you are paying taxes on your income in the country where you're living. So let's talk about some numbers. So the maximum amount you can exclude for 2023 is $120,000. That gets inflation adjusted every year, so it goes up from year to year. And keep in mind, this isn't dollars. So if your salary is in euros or another currency, you'll do that conversion to dollars first. And that exchange rate changes every year, so sometimes it will be higher, sometimes it will be lower. So the maximum amount gets prorated for the amount of time that you spent outside of the US. In other words, it's reduced if you were not outside the US for a full calendar year. If you use the bona fide residence test for a full calendar year, then you get to use 365 days in that calculation and the number, and you get the full maximum. So if you're using the physical presence test, it does get reduced. So in our example before, where you moved to Germany on June 1st, 2023, and then you were in the US for 14 days, for simplicity, we'll say that was in 2023, and you were back in Germany on January 1st. So you need those 330 days to qualify to take the exclusion at all, and that can straddle 2 calendar years. However, to find the amount that you can exclude for 2023, you can only look at 2023. So in 2023, you were in Germany for all of January 1st to December 17th, so that's 200 days. So 200 divided by 365, that's just under 55%, just a little bit more than half. Actually, you're required to round that percentage to 3 decimal places, so it will be 54.795%. So you only get that percentage of the maximum amount. For 2023, the maximum is 120,000, so the maximum exclusion you can get is 65,753. And remember, only your foreign income counts for the exclusion. So in this example, the income you earned in Germany from June 1st onwards. So that's kind of more likely to align with that reduced exclusion amount. So for example, if your salary income over the whole year is 80,000, then 7 months of foreign income will be 56,000. So that's below that reduced maximum. So if you're a higher earner and you can't cover all of this with the exclusion, that doesn't automatically mean that you're going to be paying taxes on the income that's above this threshold. I often talk to people who are worried that if their income exceeds this amount, they're going to have to pay double tax. And that's not necessarily the case. You can still get a credit for the foreign taxes you paid on your income. So foreign tax credits are pretty complex. If that applies to you, that's a great time to hire a tax professional. I do intend to make a future video and talk about that topic some more. So there you go. That was a big information drop on the foreign earned income exclusion. I hope that's been helpful and maybe shined a bit of a light into the confusion and darkness. I'll make another video soon where we talk through filling out this form and actually putting those numbers into a tax return. So I hope you'll subscribe to the channel, and then you can stay up to date on the latest videos and be the first to know when we post new videos. And thank you for watching, and until next time.